Good evening, everybody. Getting to be fall weather. Getting a little bit nippy out there. However, we're able to see what's happening in these markets based upon the pattern setup. Look at our kind of J-hook pattern that told us if wave 1 and wave 3 were going to be the same. That was definitely going to break out to the upside, which as we can see, it's happened on the Dow. The NASDAQ broke out. I guess it broke into new high territory today. And the S&P 500 continued to move up into high territory, coming off this little kind of a hammer kicker type signal. So being able to see that there's no change of investor sentiment allows us to take advantage of a lot of the patterns that we're setting up and giving us that much more confidence to be predominantly long based upon one simple factor. This uptrend, ever since they gapped it up, they've never been able to close any of these indexes back below the T-line. And the fact that we've broken out into new territory, we basically have a nice big wave, then a sideways consolidation, good possibility of another strong wave in these markets. So there's so many times when people ask, or people listen to these talking heads, where they say, well, where do you think the market's going to be 6 months from now or a year from now? None of them have any idea where it's going to be. All we really want to do is see what the market is telling us. And then you can kind of extrapolate that if this is kind of a sideways move and they're breaking out here, that there's a good possibility we could be moving much higher. Now, does that mean it's going to move much higher? Looks like it. But right now, all we do is just stay long until we see that sell signal. Lots of good charts out there. We recommended AEIS today because you can see what type of pattern was occurring right here at the breakout level. There's your obvious J-hook pattern telling you that this level right here is probably not going to act as resistance if wave 1 and wave 3 are the same. And we got a J-hook pattern. So not only are we at the breakout level, but we can kind of expect that if they break out into new territory, people are going to start piling in. We recommended OPTN kind of on the same basis. Look at your slow curve, and then what type of pattern did we have, or signal did we have setting up? Well, there's our morning star, followed by a doji sandwich, our morning sandwich, slow curve, staying above the T-line, right here at a breakout level. This is what happens when you get to a breakout level, and we've got the additional benefit of seeing what type of signal is occurring so that we have a much stronger inclination that we're going to be in a situation where if there is a breakout and you get a big price move, you've got a good probability that you're going to be sitting in it. Kicker signal on Axel. Where do you think the next target is? So these kicker signals, which are being created right now by a lot of good earnings reports, making some very strong chart patterns. There's our J-hook pattern on XNET. Where did I get EN? But it doesn't. Today's indecisive trading didn't put us out of the realm of a strong price move. Because if it opens positive tomorrow, what do we got? Potential of a doji sandwich, breakout of this area right here, and we've already got a power move consolidation if they break out, we could have another power move of that same magnitude. So all we're really doing is visually identifying where the strong bullish movements have come in, and then being able to analyze whether those bullish movements are still in progress. IC, same scenario. Now, there's other times where you want to come out of a trade. For example, we knew that earnings were going to be reported today, or after hours, on DCPH. And as we went into the close, look what it was doing. It was doing an indecisive trading day. Now, did it tell us that the uptrend was over? Not really, but look at all the pieces of evidence that we might now be in a high-risk situation where you had kind of a shooting star doji in the overbought area. He'd moved a good distance away from the T-line. We went ahead and took profits. Because what would be our criteria for staying in this position with earnings being announced? Well, they could move it up strong, or they could move it down strong, or they could move it sideways. So we're in an overbought condition with a potential reversal, and 2 out of the 3 things that we could be looking at would not be beneficial to continue to own this position. So what's the logical thing to do? Take your profits and go find something that looks more like this. When you do that, you'll have a lot less decision making to do, and you're always going to put yourself into situations where the probabilities are in your favor. You're not kind of hoping that things are going to move in the right direction. Visto, once it had the big kind of doji sandwich breakout, now look what's happening. There's your fry pan bottom. There's your doji sandwich. There's your next target. So this is why hanging on to a position, as long as it doesn't close below the T-line, just improves the probabilities that you're still heading in the right direction. We have some people that have held on to Kraton, which is all right. Had a scary day here. So if you didn't stop out, what was the criteria? It had to open positive and trade positive the next day to stay in it. Column I'm in. This one, you can see where the kind of the breakout level was with a doji sandwich, T-line crunch up into that resistance. All you can do here is stay long. These are all positions that we've recommended recently and still have long positions. Dan, look at the little bobble breakout. 10 backed off. So if you closed it out, now you get ready to buy it back, or you could have bought it back today. Where do you think your next likely target's going to be? Buy it back up here at the 200-day moving average. So I'm going to try to go through these pretty quick. CVET, an excellent chart in the sense that look at your series of dojis, kind of your cradle pattern. Where do you think your next likely target's going to be? Iridium, there's your J-hook pattern. You can be buying this one on positive trading with the expectation of wave 1, wave 2, going into wave 3, or at least a test of this level. RTRX, big fry pan bottom. Now, there's some fry pan bottoms you don't want to buy because to get to the breakout level may not be worthwhile. But in this case, if you're buying here to go here to make a 15% return, 15% is still viable. And then if it breaks out through that level all the way back up to the 200, now you've got a 50% upside. So as long as your fry pan bottom has potential just going to the breakout area, at least you know you've got your money sitting someplace where the return is going to be relatively strong. ICHR, ever since the breakout little best friend, J-hook pattern, you stay long. The same scenario on UCTT. Ever since the best friend breakout, you stay long. And TDOC, there's your ticker signal, breakout. All you can do here is stay long. Now, when you start climbing up into the overbought condition, that's where you put your stop at a place that the trade shouldn't, or the price shouldn't trade. So right now, tomorrow morning, if this open positive, we put our stop immediately right here at today's open. Because logic says, if there's enough selling pressure to come down through there, where do you think they're heading? Right back to the T-line. Take your profits. LKQ, your best friend breakout. Stay long. This is why, I don't know whether I can do this. I'll try it later. I'll bring that whole topic up about scanning, especially using, swim scans for. So there's our kind of our fry pan bottom belt hold on Goss. Now we're up here, obviously. That's a redundancy. In the overbought area. It either is going to break out, or if they start selling off, it tells us this is a double top. So you put your safety stop just below today's low. Once again, a doji in the overbought condition, if they have enough selling pressure tomorrow to bring it back down through that level, what's that tell you about this level? It's acting as a resistance level. Now, we've had only one short position on recently, which was 6. But when you saw it gap down in the oversold condition, where was your logical safety stop? At the high of yesterday of the doji. As logic says, if it came up through there in the oversold area, moving positive after a doji, it was time to close out the position. Crocs. Here's one to just kind of put this in your mental arsenal, that if you see something where they are doing a new offering, which is what happened right here, you still use your ultimate indicator, the T-line, because you're always probably going to get at least that reactionary knee-jerk reaction of the sellers coming out because they're putting out new stock. Well, that doesn't change the investor sentiment. All that did was change temporarily the supply and demand of stock available. So that's why you still use the T-line. You can still hold Crocs because it hasn't been able to close below the T-line. And Cody, indecision. Where was your safety stop? If it opened positive, it shouldn't trade back below the T-line. Because now what do you got? What do you got? What do you have? What you got? A left-right combo after a long series of dojis. What's that tell you? Just the fact that you can see a left-right combo was information to say get out of this trade. That's kind of the nail in the coffin of all this indecision up here. Okay, as far as, carbonite, still working nicely. Nice, steady uptrend. Got a bunch of them and I'm missing. Okay, some of the biggies. We've got calls on NVIDIA. Look what it did on Friday. A left-right combo right here on the T-line. Where do you think the next target was going to be? Back up to the top of this channel. Netflix, uptrend. Ever since your left-right combo. Now your doji sandwich. Now your double doji. So as the more pieces of bullish patterns that you can recognize, plus staying above the T-line, the more comfortable you're going to be by knowing what positions to hold and which ones to come out of. Tesla. You can see what they used as support today. Right smack dab off the T-line. MT, yeah, you could probably buy Netflix. Let me finish Tesla. Tesla you can buy, especially if it opens positive and starts trading above this level. What do you got going on? There's your J-hook pattern. And if you're long, where's your safety stop? At a logical place that tells you it shouldn't trade back below this level. So Netflix, yeah, you can still buy this with kind of this being your first likely target, and then back up here being your second likely target. Now that's on the basis that if we think that the bullish investor sentiment of the overall market is still going to stay in a wave 3, yeah, you want to start going after the charts that look like they have the best potential to the upside. Cree, look at your big belt hold type signal. It didn't confirm yesterday, but it confirmed today. This one you can be a buyer of because of this huge signal right here. This one's out of place because the oils are all coming back. There's your Morningstar signal gap up right here at the 50 on EOG. If it opens positive, what's it telling us about the 50? It's not acting as resistance. What's it telling us about confirming this pattern? The signal still confirming. Crude, yeah, I can do crude over here. Crude hasn't backed off. Now, again, I'm going to say it anyways. I don't think crude's going to have any massive moves anymore now that the U.S. is producing its own supply and even exporting it. I think the price of crude oil is probably going to level out, trading anywhere between, let's say, $55 and $60 for quite a while. Now, if that's the case, that still makes a lot of the crude oil stocks now based upon their own reserves and merits without having to worry about their values swinging up and down quite a bit. So look at the little slow curve on Whiting. I will skip down here. This one we picked up on I spent most of the weekend trying to figure out how to simplify the scans for Thinkorswim. Well, that came up on our best friend scan, CRC. Now you've got kind of a scoop type best friend. And gap up, that usually indicates there's going to still be a lot more upside. NTNX. Oh, here's one. This was supposed to be done at the same time with Cody. Another one. Doji, shooting star Doji. Bearish left-right combo. What should you have done with this one today if you were long? Closed it out. The probabilities went against you. ARA. Observe the obvious. Fry pan bottom. I would still be a buyer of this one on positive trading. Now remember, a lot of people will say, well, you're already up in the overbought area. Remember, you buy the signals when you're in the oversold area. You can buy the patterns even though you're in the overbought area because that's usually where the breakouts are going to occur. Apron, look at your left-right combo, big spinning top, bullish confirmation. Now, it had a huge move, so if you were trading this one, let's say you bought it here and it moved up here, what would you have been doing at that point? Oh, you would have been flipping over to your 10-minute chart. That's the 5-minute chart. That's Wonder. This is what you would have been doing, is when you saw, even on your 10-minute chart, that you were that far away from the T-line. And what were you seeing on your daily chart? You were that far away from the T-line. So this is where, how do you know when to take profits? All of a sudden it's trading up here. Where are you compared to your T-line? I see that. I got to get a little bit quicker. I go to my 5-minute chart. So this apparently was a spike. But as soon as we start seeing it sell off, that was the time to start taking profits. Do you look for specific sell signals on the 10-minute chart or just weakness? Well, in this case, it was just weakness. Now, there's a lot of times where something will move up, move up, move up, move up, and the 10-minute will go up with it, while at the same time your daily chart is way up here. And then if it turns and starts trading, jumping for joy, trading back below the T-line, that's when you take profits. In this case, it looked like that was kind of a spike up this morning. LX. Somebody pointed this out in the chat room. Got going on here. Right about the breakout level with a bullish flutter kicker, kind of a J-hook pattern supporting on your 200 and your T-line. What do you want to do with this one? If this opens positive tomorrow, look for wave 3. Why? Because there's your bullish flutter kicker, which implies there's going to be more upside. Oh, we were looking for kicker signals. There's your kicker signal on UPS. Now, UPS isn't a very exciting stock to trade, except if you can see with a strong probability which way it's going, there's always a spread or an option trade that you can do on these type of stocks that will allow you to take advantage of a strong price move in a specific direction. There's another kicker signal on Texas Instruments. Opened here, closed here, gapped up to this level. Where do you think your next target is? Probably up here. Another one that might make out for a very strong spread trade. What do you expect on this one? Carnival. Well, if it opens positive, what do we got going on? Your bobble breakout. Wave 1, wave 3 should take you at least up here to the fill that gap, and then possibly up here. So where will it go? Have no idea. We just know if this opens positive and does a bobble breakout, J-hook pattern, we've got a high probability that it's going in this direction. Now all we do is analyze when we start seeing the selling holding that position. Lynn Resorts. What is? I can't even read my own handwriting. I have no idea. But you can see the fry pan bottom, T-line crunch, breakout, more upside. To you. Fry pan bottom. There's your little J-hook pattern breakout. A lot more upside. Salam is because I've been looking at them for years. Now, that's not because I'm any great analyst. All I'm doing is recognizing the same type of price movements that have high probability results. Fry pan bottom on 9, one of your oil stocks. Just puts you in a situation. Now, is this one going to move better than something else? I have no idea. But when I can look at my portfolio on any given day, and on most days I might have 6 or 7 or 8 trades moving in the right direction, and this is what I was trying to convey in the afternoon newsletter, is for so many years, even as a stockbroker, when I would have people's portfolios or know what their stocks were doing, ones that they wanted to hold, you could have a good market rally, and it wasn't unusual to see half their stocks going up and the other half of their stocks going down. So it was kind of like kissing your sister. You weren't getting anywhere. And so I couldn't figure out how to, back then, because I didn't have candlestick charts and I was only 21 years old, I couldn't figure out the intelligent way to advise them how to make money. Well, at least now we have a platform to say, if we're constantly putting our funds in charts that are moving in the right direction, there's days, and they're getting a little bit more common, that maybe 9 out of 10 or even 10 out of the 10 positions are all moving in the right direction. But I'm not sitting here thinking, oh man, I should have made more money today because 6 of my trades are up and 4 were down. That was vanilla. Now I'm more apt to have 8 or 9 positions trading positive and maybe 1 trading down. But my overall return for the day is very good. So doesn't matter what you're looking for as far as patterns and additional things to help those patterns out, like a belt hold on MEO. What's this kind of imply? Well, this implies there's more upside. A doji sandwich, belt hold, fry pan bottom right here at the breakout level, where we think our next target's likely to be. So this isn't rocket science. This is just taking patterns. Here's the classic pattern on pod. Fry pan bottom, what do you get out of a fry pan bottom? A strong price move, a pullback, and a J-hook pattern. What's the prerequisite for a J-hook pattern? A strong price move. So these work in conjunction with each other. Wouldn't be afraid to be buying this one if it opens positive tomorrow. Ranger. There's your fry pan bottom, J-hook, or in this case looks more like a cup and handle. So where do you think your next target's going to be if they support it on the 50? Probably all the way up to the 200. Eva. Under your fry pan bottom, J-hook. Big fry pan bottom, J-hook. Look at your morning star signal. I mean, just the fact that you can visually see the pattern set up, and you can see specifically each signal that sets up. We know what a morning star signal illustrates. Good, strong result. We know what the fry pan bottom breakout illustrates. A good, strong result. It just puts you in situations where the probabilities are immensely in your favor that you're going to make good returns. So right now the oil stocks, well, for crying out loud. Why that one doesn't come up over here, I don't know. ALNE. Val. Bullish Harami, double bottom. If this opens positive, try a strong price move. SM. Morningstar signal. Strong price move. We did Whiting. Look at your Morningstar type signal, scoop type pattern. look for a slingshot effect. So if we can identify a pattern, a trend, and a signal that enhances that pattern or trend, it just puts you in positions where you're going to definitely improve your probabilities of not only being in the right direction, but in a situation or a series of dojis where the next move is going to be fairly extensive. Left-right combo on AAOI. Where do you think your next target will be? There's your best friend gap up. Where do you think your next target is? Up here. RATA. Big morning star signal. Wedge type formation. So if we can identify the resistance level, the support level, if it breaks out through here, what do we got going for us? A big morning star signal, smack dab off the 50. If it breaks through the top of that wedge, it just tells us we've got an extremely high probability that we're going to be heading a lot higher. Taylor Brands, there's your fry pan bottom, cup and handle. Where would you put confirmed bullish Harami on the list of strong signals? Casey, it doesn't really matter. We've already kind of classified or quantified the best signals and patterns based upon taking the 50 or 60 signals and making the 12 major signals. So just those 12 alone give you good probabilities. If you see a bullish Harami, especially right smack dab on a support level, like right here, a bullish Harami doji followed by a gap up, the fact that they did it at a level that everybody's watching and we know what a bullish Harami tells us, that selling has stopped. We know what happens if they open up positive the next day. Not only has the selling stopped, but the buying has come back in with good strength. So don't limit yourself to just one. I mean, just realize that a bullish Harami followed by a positive open is going to be a good trade setup. So look at our Morningstar signal, today's doji on Pier 1. If it opens positive tomorrow, where do you think your next likely target is going to be that everybody can visually see? Right up here, because this candle and this candle should be the same. So you can pretty much calculate where you want to get in and where you want to get out. Hold on, I've got 3 more here, and then I'll answer some questions. There's your J-hook pattern on HSC. We did TIVA. TIVA. There's kind of your Morningstar signal, fry pan bottom breakout potential. MTOR. There's your bullish Harami gap up, starting wave 3. Which tells us wave 1 and wave 3 could be potentially the same. Like this morning with Cody, as it gapped up from the T-line, I went long call. Then it started lower. I closed out the position with a 20%-ish loss, and I moved the funds into 3. Salam, there you go. This is the whole point of knowing what to do and knowing what to do immediately. So if you bought this one on the basis that it should have been moving in this direction and it started coming in this direction, yes, close it out. Now, it's hard to take a loss. That's one of our big emotional bugaboos. Because we think we're intelligent, speaking for myself, I think I'm intelligent, that when I make a decision, it's because I'm smart and it should do what I expected. When it doesn't, that kind of really rankles on my emotional evaluation of myself. But if you always keep in your mind that probably 30% of the trades aren't going to work, what that does is gets you out of bad trades quickly and allows you to move on to something else. So most of the time, if I had bought this back before candlesticks came along and it did this, I would have held on to it, saying, no, I thought this was going to work. I'm going to see if it's going to work, instead of saying, this didn't work, let's move on to something else. And as you can see, Salam, that you took your money and moved it someplace else and got your returns right back because you came out of a bad trade and moved it immediately over to a good trade. That's what is the makeup of a good trader, is to close out a bad position fast, because there's always going to be better positions out there. Is it helpful to have the 3T line on your charts, especially with a strong market? Do you ever take partial profits when prices exceed this moving average? I will take partial profits if I've got a good profit. I'm just going to use this one for example. Let's say I did buy here, and then it started doing this, but it hadn't closed below the T-line. And at this point, I didn't know whether the T-line was going to come up like this as they curled it back up, but I might take off half my position. Yeah, so the fear factor always is closing out a position and then all of a sudden have it do what you expected it to do in the first place. That was what always killed me, because that meant I would always hang on to a position all the way back down to where I bought it instead of taking profits, because I was worried that if I took profits, it'd turn right around without me. Well, at least now we have the graphics to show us when to get right back into a position. That's one of my uglies. Yes. So just, even if you take a sticker and put it up on your screen saying 30% of my trades might be a loss, when you look at it, that way you've taken your emotions out of the trade and reminded yourself, oh, this didn't work, move on to something else. Please discuss waiting for a retest of a breakout. If you got up here, if you cut off the chart right here, what did that tell you to do? If you had been long, I would have stopped out right about in here. I can't see. Is that two red candles? Yeah. I would have stopped out right here, because what was that telling you about your probabilities? Worst case scenario was that it might come back down. Now, best case scenario might come down here. So you close out the trade. Now remember, when you close out a trade, you're not cementing up your order taker. You're closing out a trade and waiting to see what it does. Now, if I closed out here, I'm not afraid to be buying here, because I know exactly what type of pattern is setting up. There's my bobble breakout. So there's lots of times, and it used to be, if I closed out here for some lucky reason and they started back up, what was my first inclination? They're not going to trick me and get me back into this and then turn right around and take my profits, more of my profits. At least now I know what patterns should be setting up. So I know that if I took profits here, because I didn't know at this point whether this was heading all the way back down here or whether we were doing a bobble breakout. At least now I know what should happen if this opens positive. We should be in another wave to the upside. I didn't know that right there. So when it hit the resistance level and did a bearish Harami and then did another bearish candle, what did that tell me about the resistance level? I should be out of this trade. Let's move on to something else. I can always come back to it. Okay, I guess that's about all I got. Here is something that I usually don't go out on a limb. But with the markets producing patterns that are taking you out into new high territory, it's not like we're saying, oh, we're in high territory, we should get ready and close out positions. We can identify that maybe now we're in another wave after 3 months of consolidation. Okay. Now, when we did a survey recently, we found out that approximately 60 to 70% of the people use Thinkorswim. So we're in the process, that's not what I want to do, we're in the process of, well. I'm going to do that. Trying to, oh, for crying out loud, just goofing this thing up, boy. Of trying to set up the scans. Now, the feedback of working with Thinkorswim is that it is very cumbersome. And that I don't use Thinkorswim for my scans because I've got my scan set up from years ago. But I know now how to set up the scans, and I don't know whether this is the most efficient way to do it, but for example, trying to get to, what was it that, that some of these, so much for, there it is, the best friend signal. Want to save, want to add condition. Okay. So now we have a best friend signal with my parameters of stock. So when I do a scan, here's what comes up. So now what I'm trying to figure out is how we move this over to the watch list, which is over here to the left, and then be able to go through and analyze them. So, anyways, we're in the process of doing that. Now, I was with one of the formatters today for about 2 hours, and the cumbersome aspects of TOS, even he says it's cumbersome. So we're in a process right now of trying to streamline how to find our best trade setups or the formulas that we've already put in there. Because over the last couple of days, this is how we've found things like a little bit. So, for example, this is how CRC came up on our scans the other day, again, with that gap up. Okay, CB, I'm not going to do it right now because I've only got partial screen up, but we're going to probably spend an evening here pretty soon where everybody that wants to kind of add their heads together, we'll figure out better ways to come up with different scans. What a thumbnail. All right, Ron will discuss that. Yeah, so that's why we're going to have a session pretty soon for CB installing, even with the ones that we formulated, like the best friend, the left-right combo, the kicker signal, all of those. It was even difficult for me to figure out how to do it step by step. I added a few choice words to my technical analysis, putting in. So that's why I'm trying to go through a step by step, making it simple for everybody. So anyways, that's in the works. Yes, I've already done that, Deanna. TC2000 is a lot easier to work with. But what we're trying to do is a lot of people have Thinkorswim. So instead of them having to, if they don't want to go to Metastock or TCNet, I'm trying to make it easier for them to do their scans right on Thinkorswim. Yes, that's CP. That's the whole point. We did all those scan setups so that people would have them and not have to formulate them into Thinkorswim. Okay, so that's what I've got now. Are there any general questions on candlesticks? There you go, Joe. That is it. Successful investing is not only finding the good trade setups, it's knowing what to do when that good trade setup doesn't work. Was he, I can't, it's been so many years ago. Now, who was the other guy that owned Thinkorswim that was bought out by, I hate to even say that, he was a good friend of mine, now I can't even remember. Tom Sasson. Yep. Okay, I guess with that, Jim, go ahead and do the double line. And in 3.8 seconds, do another double line. T. Rowe Price, kind of a little bullish flutter kicker signal. Stay long on this one. That's a good chart. Brunswick. I haven't been bowling in years. Another J-hook pattern. Get ready to buy this one on kind of a little bullish flutter kicker. Good one, Bill. Both of them. Pfizer. I would have closed this one out today. That's just not a good signal. No sell signal. Red candles. Yeah, if it opens weak tomorrow. To stay in this, it has to open positive and trade positive. XLNX, good gap up. Not a great chart, though. The only way I'd really want to be a buyer of this one, you can see it didn't have a reversal signal. And then when it hit the first resistance level, so it wouldn't be one of my top charts to trade just because it doesn't really have anything to sink your teeth into. That one, Devon, is much better, one of the oil companies. Morning star signal, close above the T-line, gap up. I'd still be a buyer of this up through the 50. The Sox, stay long. Nice little J-hook pattern, fry pan bottom. Net, another one where you can stay long. Have your safety stop at today's low. Ben Franklin, good chart. You can be buying this one. Good 10%, 15, 20% back up to the 200 anyways. Twitter, nothing. I'd have my money elsewhere until it shows you a direction. And CBay, that one with a left Morningstar signal, I'd be a buyer of this one on strength. We did Trox, can't remember, but TD bought them out and Don stayed on with TD for some time. Okay. UAL. I know what UAL is. United Airlines. Just make sure it breaks out through this level. So you definitely need to see it get up through here. I wouldn't want to see it trade back through the low because that would tell you they're having a hard time getting up through the resistance level. Boeing, you can start buying. There's your bullish Harami, bullish gap up through the T line. At least use this level as your potential targets. BRSK, stay short. Now you're in the oversold area. If I was short, look at your big bearish failure at the 50, failure at the 200, but I'd have a safety stop right at the 200. I wouldn't want to see it come back up through that level. Stay short on this one. Bearish J-hook. Obvious potential target is the 200. And BPTH, if you're short, you stay short. If you're thinking of going long, put a buy stop just above today's high. If it comes up through there, it's confirming this bullish Harami off the 50. But you can see where your stochastics are. You're in no man's land right now. See now? There's the bigger the signal, the more compelling. I'd be a buyer of this one on positive trading tomorrow, your doji sandwich breakout. McDonald's, not a happy meal anymore. You can see the bearish J-hook, so stay short on this, or you can even short it, especially if it comes down through today's low. Wynn Resorts, gap up, stay long. Did I not mention D now? Oh, yes. Sorry. McMuffin setup. Exactly right. There's your Morningstar signal. If it opens positive, your McMuffin, making this your likely target. EXPD. There's your best friend. There's your bullish Harami, doji Harami, gap up. At least your first target is probably right here. So you could be buying this one on positive trading and then see what it does at that resistance level. Costco, I wouldn't be long or short. No direction. This one you stay long. That's your fry pan bottom breakout. Notice how the breakout occurred with your best friend breakout. You just stay long. Your safety stop right now should be at today's open. Boise Cascade, little scoop type J-hook. Stay long. Just be careful. I guess it broke through that one. I guess be careful now that you're up near the top of this trend. So it doesn't tell you it's not going up. Just make sure you're aware of that little trend area. Nally should be still paying a good dividend. You can be buying this one, knowing that it's going up and still paying a good dividend. KKR, all you can do here is stay long as it stays above the T line. Watch to see what it does right at that level. Western Digital. The selling has stopped. I wouldn't be a buyer if I was short for any reason. I would have covered the short today. I wouldn't necessarily be a buyer because you don't have anything that's really telling you the direction, which means I would be out of this trade and off someplace else. Now, when I say I'd be out of that trade, when you're looking at a chart, you can't really tell what it's doing. The importance of being able to do your own scans is having a supply of good trade setups where on any given day, if I've got something that doesn't look good, I can go to my supply of new scan picks and have 2, 3, 5, 7 excellent trade setups so I can move out of a iffy situation and into something that has a much better probability. Oh, when? I don't know what was before Costco. This is not good. So it's not a reversal signal. It's not a dark cloud and because it didn't open above the high, and it's not a bearish engulfing because it didn't close below previous day's open. But if it does open lower, I would suspect it's coming back to test the T-line. Starbucks, if you're short, stay short, but be aware of what it does here at the 200. And Netflix, you can be buying this one on positive trading tomorrow. Okay, EXPD, all right. I use trailing stops if I'm in an uptrending position. I forget which one we were looking at. I'm trying to think of what Eddie. Goss. Eddie. So today I would have had a stop back here. Tomorrow I may have moved my stop up here because of the signal. So yes. Now I'm usually using trailing stops at a price where it shouldn't trade. So if I bought here, I wouldn't want to see it trade back below this level or close back below this level. So I pick a spot. And each day, I can pick a spot that tells me where I don't want to see it trade. So, and it's not based on a percentage. It's based upon where would it tell us that our parameters have been breached, that we want to be, don't want to see it trade back below that specific level. Facebook, you can stay long, just use your T-line as your stop. Amazon was a good example of the belt hold, fry pan bottom. You can still be a buyer of this one on positive trading because you got a kind of a fry pan bottom with your belt hold as your dimple. Could be more upside. Werner, they're a clothing. Clothing manufacturing. Anyways, there's your best friend. I'd be buying this one with the expectation of wave 3 starting. And Microsoft. Not a good trading stock because it's such an institutional trader. But if you like it, you stay long as it. Oh, it's a trucker? Okay. Wagons. Okay. Microsoft, you can stay long if you like it. It just doesn't move around a whole lot because of the big float that it has. So to me, it's more of a long-term hold. All right, we are in a good market environment. So as long as these indexes are staying above the T-line, with the expectation that we've consolidated for months, that we still could be heading up, breaking out through this area into another strong price move. Okay, everybody. We will see everybody bright and early tomorrow morning. We'll see you then.